Look, that's not bad at all. We've still got today to go. Of course, we're going to be trading the US Open this afternoon. You guys will, as always, receive your full written breakdown for that this afternoon at around 1:30 to 2 p.m. So stay tuned for that one. Good morning, ladies and gents. Welcome to your Friday's Markets Now session. The good old sleepy Friday morning. Good to see you guys. Sipping my coffee here. Enjoying what the day ahead's gonna bring, I hope. So, as we usually do, nice little wind down, reflection period. Think about how the week's gone so far, which is not going to be a great deal to think about this week in terms of trading performance necessarily. It's been very, very slow. We did end up getting a very nice long in the US 30 Dow Jones yesterday. We're going to have a little bit of a dig into the trading history throughout the week. Obviously, as I said, there's not really much to dig into. It's probably going to be quite a short session really, but that's fine. I'm happy to take on some questions as well if there's anything that you guys want to particularly dig into this morning. And then we will have a little scan around the charts. I know this is surprising considering I hardly ever do this, but I am going to actually dig into the FX space a little bit this morning to see if there's any Friday morning intraday trades that might be worth having a poke at before the weekend. So we'll get onto that in a moment, but first things first anyway, let's have a look at our trading returns this week. So the weekly return is 1.85% so far. So look, that's not bad at all. We've still got today to go. Of course, we're going to be trading the US Open this afternoon. You guys will, as always, receive your full written breakdown for that this afternoon at around 1:30 to 2 p.m. So stay tuned for that one. Yesterday was pretty good. We had the Dow Jones. There's the exact trade. So that was really nice. We got in 233 and we got out at 346. It was a long haul trade. Unfortunately, we didn't intend for it to be that long, but it did drag on forever. I know, Scotty D, you were well aware of that because you were in the exact same trade as I was, and it did take its time to really get to our target. I can't even remember where the bloody hell it was now. 233, yeah, so it's around here, wasn't it? So we were looking at the TP of the previously used floor, which was about there or so, and this was where we were looking to trade away from. And we really did have to have some patience with this one. That was my entry candle right there, and we stuck in it and just let the damn thing go, and eventually it came up there and hit our target profit. Do you know what? I didn't actually walk away. Oh, actually, sorry, I do beg your pardon, guys. I know you can't see the charts at the moment, can you? But yeah, as well, actually, Scotty, don't worry, mate. Yeah, you know exactly what I'm talking about anyway. But directly after, I was sat at the screens still looking at it, thinking and considering to take the short. And I said to myself, I was like, you know what? It's been a long time that the market's taken to just reach this level. I didn't want to be stuck in something again. I didn't want to run the risk of being, taken out due to the lack of trading volume that we have evidence of. There's clear evidence of it. So it didn't make sense to me. What did the market do? It went straight from 44.90 down to 44.76. It was like, a quarter of the time it took to drop back down. It would have been a really nice, essentially doubling up on our returns. We would have been about 1.45% up yesterday instead of the 0.75%. Look, it's hindsight trading, of course. Everything's always going to be a little bit more pretty after the fact, but it was a little bit of a kick there anyway. In terms of the rest of the track, though, yeah, I mean, things going well. It's just slow. It is just very, very slow this week. We haven't seen that wind in our sails, but we haven't been taking a beating. We came to the end of our losing streak. That was last week on the 7th. And so far, what was the beginning? What was Monday this week? What was the day? 11th? Yeah, 11th. So the 11th, so on the 12th was our first trading day, and actually, to be honest, it's been all right. I mean, USD CAD, Euro USD, US 30 Dow, those three opportunities were predominantly CPI trading opportunities. So we did actually do pretty well. Yeah, okay, we had a ridiculous 0.97 on the risk reward front because of the slippage that I personally incurred. I imagine everyone got some pretty bad slippage on those events if they did end up trading them. But we did end up, the CPI event, we did end up pretty good for that one. The NZD CAD and the silver opportunities obviously triggered out of the order book development session that we did and went to losses. All of the other trades, bearing in mind we had quite a few in the order book, and all of the other trades unfortunately did not trigger and didn't take place, so they were all removed. And then we have Euro NZD, that was one of the only winners that we had for 0.56. And then yesterday's US 30 Dow Jones for 0.75. So I wouldn't say this week has been inconsistent by any stretch. It's still been really good. It's just been a lot slower, a huge reduction in trading volume over the prior weeks. Over the prior weeks when we were absolutely smashing trades out of the door, weren't we? So a big reduction in the trading volume, which is fine. That's absolutely fine. What I'm really excited about, really, is that look at that figure. That's a nice figure. 1,638.12% return. That's the total return, though. Remember, I've never actually had that much at one time in the trading account, obviously due to withdrawals, and that is completely provided transparent, because if you go down to current assets under management, that is the actual figure. All withdrawals are in here as well, so you will this is directly connected to the MT5, so whatever happens you will directly see. But that number is pretty good. That is pretty good, and now that we are consistently above the one bill mark here, the 1 mil, sorry. This is going to increase significantly because the 0.25s, of course, are worth significantly more than they were back in time. But also with that, there's going to be reductions in risk management. There's going to be an overhaul in the risk system, because at 0.25%, you're still risking an incredible amount per trade. And you don't need to do that much. It's about preservation, right? It's about self-preservation in the markets. So I'm going to do full sessions on that as well, because eventually you guys will be handling larger sums of money once you go on your way, and you're going to get larger and scale up your prop firm accounts and so on and so forth. So we're going to cover all that kind of stuff. But it's one hell of a wave, guys. It's been one hell of a ride so far. It really has. And yeah, one hell of a ride so far. Crazy. Yeah, crazy. But anyway, so that's really that. There's nothing more to really check out on the track front at the moment. There's, in terms of critiques, self-analysis. It's a very, very important part of the process, but frankly, there's not enough data to actually do that with. We haven't really done too many trades. We know exactly where we were with the CPI event this week, which was quite profitable for us, and that was good. I think 5.5, 6.5, 7.5, 8, 9. Yeah, so we took about 1%, didn't we? We did about 1.1% from the CPI event this week. It's not too bad. And then of course we had just over 1% from the last couple of days trading as well. So that's where we were with that one. And that's about it. So let's go over when you got back home. Yeah, that's right. I do recall you had to pop out, didn't you? So let's go back to the charts then. So let's go check out, see if there's anything going on for us today. There might be. Let's have a little look. So first of all, the Aussie CAD. We need to have a review of this. Okay, the Aussie CAD at the moment is trading there. This was actually looking really good, really impressive. Where it's trading right now, I'm almost considering cutting it. Now, only because it's Friday, of course. Last week, I gave clear instruction to everyone. If the market was trading anywhere sub, I think it was like this level or something. I can't remember exactly where it was now. But if we were trading anywhere sub this level, then we would be instantly out. The market did end up coming down to it and then coming all the way back up or somewhere and abouts. Yes, that's right. Yeah, Friday we were trading down here at the beginning of the day. By the end of the day, we were coming back up here again, so we left it open and naturally that went straight to target, so that was really nice. I don't necessarily want to cut this off. Looking at the trade idea, the quality of it, moving away from big money here, we got commercial capital on our sides, absolutely do. But I want to make sure that it's got the room to breathe over the weekend for any potential gaps that we may see. Now, I think that level of liquidity right there is quite prominent for me. That is certainly the midpoint of an intraday M reversal. What I'm going to say, this is the instruction. If we're trading in the red, anywhere in the red, towards, let's say, 5 p.m, the trade's out. I will cut it off. I'm not going to be here this evening, so I'm not going to sit in front of the charts on a Friday evening until 9 p.m. equivalent over an Aussie CAD short. So by 5 o'clock, if the trade's trading up at around 90 or that sort of 90 level, the 90 magnet number there, I'm going to be out. I'm just going to call it quits. So long as we stay beneath the liquidity point here, let me highlight this in. This is like the danger zone, right? So we're going to label this as a bright red. We're going to fill that one up. There you go. So yeah, so long as we're trading anywhere below this, we're absolutely fine. We'll let this one go. We also have the cable, which unfortunately, again, yesterday looked really, really good. We were, coming into a stone's throw area away from our target profit, and it's rejected big time and gone right the way back up to retest this level, which frankly might have never got a retest in the first place, so I'm not entirely sure about that. But whoops, hang on a minute. There we go. Yeah, so it's an interesting place that it's come back from. I mean, obviously we were trying to ascertain which one was the key point of liquidity yesterday. By price's evidence itself, and price is never wrong, it looks like I might have been wrong in my judgment of which one was the true point of liquidity. Looking at the inflection points, I would still say that one seemed like it was the mega one, because that has the knee-jerk reaction that we're looking for, whereas this one was a little bit more controlled. But the market has actually rejected this level twice now. I'm not going to edit the trade. I took the trade with a good understanding. I'm not willing to be flexible on this. It is what it is. And I will let the trade run. Again though, just the same as the Aussie CAD, if the position is, let's say, I'm going to use those bright colors again. So let's go to red, and we're going to make that 85 like we did on the last one. There you go. If the market's trading anywhere upwards of that solid red bar, we're out. Okay, not instantly, but I'm saying about 5 o'clock this evening, when we get to the end of the day, we're going to review our order books, see what's going on, see what's live, and try and do a bit of a cleanup session before that before the closing bell. Anywhere above this level at that time, we're out, we're done. Even if it's trading, let's say even if it's trading at like 135.60 inside it, we're done. If it's trading below it, where it is right now, I'm going to be okay with that. Probably slightly on the side of risk here, but yeah, I think we'll be just fine. So that's that one. Now, we'll have a quick scan around. I know we've got those two going at the moment, but I'm just thinking about some very, very short-term intraday trades. So, to be fair, a little bit like the USD yen. Let's have a look at this one. Disgusting red. Hang on a minute. really annoying how it goes back out again. There. Right, so we've got this zone in here at the moment, USD yen. We've got a break, close and retest going on of the previously used floor at the moment. The break, close, retest continuation, back down a big liquidity. That might not be a bad trade. So we get the retest back up to there, and then the continuation, we either go for a very aggressive or very conservative entry. It's going to have to be aggressive on this one. I'm not going to lie to you guys, this is catching a bit of a falling knife, and frankly, sometimes we can pull those off quite nicely, but not every time. It can be a bit of a dangerous play, but I'm pretty confident in where price wants to go. It's just a matter of time, and it's about that timing that's going to be key for us getting our trade off successfully or not. So this in here, right, that level there can be construed as a break of structure point because we have the rebound in that candle. We also have come underneath, we've retested it once and we've retested it twice. So looking at this one at the moment, like in a format like this, we go back up to liquidity. This is the true liquidity point. This is where we've stalled. We come back up there, we retest. If we come back down and we break structure here, we've got an opportunity. So then I'd have my entry, my target profit, and my stop loss. I'm only going to be looking for a 1 to 2.2 or so. So I'd have my stop loss like at the majority of that liquidity point up there. And that's not too bad at all. That is not too bad at all. So remember, this is key. This little point in here, that's key. But that's a really nice opportunity. You can do that as a sell stop order. So yeah, that can just come straight the way back down after breaking up here and away you go. So we're going to put that one up. Again, guys, I'm not going to be loading up on positions today, just a couple. Have a look at a couple of opportunities if they're about. So we've got USD, we've got yen. It might be nice to get some Aussie and some NZD, something really far away from that. I don't want to go hedging or anything like that today. It's Friday, wind down time. What about Aussie? Oh yeah, obviously we're already in that one, aren't we? NZD, CAD. No, we've already got CAD. What haven't we got? We've got yen, we've got dollar, we've got Australian dollar, we've got pound. We haven't got any Swiss, we haven't got any NZD. Let's have a look at that. So the NZD, well, that is not looking very nice at the moment for intraday trades, quite frankly. So probably going to give that one a bit of a miss. What else have we got? Euro Oz. No. CAD yen. No, don't want to double up on the yen. CAD Swiss. Okay. Nice big point of inflection down there. Certainly commercial level. We've got a level in here the price has come back from, unsure of its viability. Certainly was decent there as well. We've come back down, the retest was a little low, but I'm not too concerned about that point. The midpoint of the W reversal down here was the main one that I'm curious about. So then what are we looking at? Positions through there. Very similar setup to the one we've just been looking at, to be honest. Yeah. With trend, targeting down there, 58.32-ish. Stop loss above the point of liquidity for 1 to 2.2. Yeah, you'll have to watch your spreads on that one. I don't know what you guys' spreads would be on a CAD Swiss. Bear with me a moment. 0.06. 0.06. Oh yeah, that's absolutely fine. I don't know, you'll have to check your spreads out on your miners like that, guys. Sometimes it can be a bit funny, sometimes not. Sometimes you get 0 pip spreads. Just check it out. Just be conscious. Just be conscious of it. For me though, I'm going to take that trade. That's a good one with trend, with the wave, and that's going to be my only other trade today. So one short in the CAD Swiss, one short in the USD versus the Japanese yen, and that's going to be it. I'm not going to look at anything else. This afternoon, of course, we'll have access to the US indices. Again, like I said, I am going to be providing a full written breakdown of analysis for those for you guys this afternoon, so you guys have got the full picture on what's going on and where the levels are and what the macro theme is on those, and then we can try and capture a few more wins before the end of the day. Heed what I said as well, please, about those FX positions. Gaps do destroy, so just be aware. If they're below the red is great, above the red not so great. Okay, we want to be looking to get out, and that's going to be about 4:35 p.m. or the latest possible opportunity you have before you close down for the weekend. All right, team. So I'm going to wrap things up there. If there's no questions, Scotty D, any questions, mate? Okay, yeah, go on, mate. Yeah, absolutely. Hit me up. How do you decide whether to use a big daily level or a smaller one like you posted this morning? So a big daily level or the smaller one like you posted this morning, if that makes sense. Let's have a look. So we go to the daily time frame, we get the context from the daily. Now the daily time frame up here, right? And this shows that we're up at the all-time high area, so an incredibly important part of the market's, structure. Very, very important part. Now, if I understand your question correctly, when to use bigger versus smaller, well, in here at the moment, when I'm looking at that, even on a 15-minute time frame, it's still going to be the point in which I expect a knee-jerk short reaction. So I'm not going to bother putting any smaller ones above price whilst we're trading inside this one. Or do I not understand the question correctly? The big one shown, I had my 15-minute in there as well, and you used an in-between one on the 1 hour. Oh, that was just to appropriately represent. Okay, I understand. That's just some confusion. That's fine. I only used the 1 hour to appropriately represent the range, and so that wasn't a 1 hour zone by any stretch, but that was a daily zone. That was on the daily. I just scaled down to a 1 hour time frame so you could see the detail of the range that we've been in, and to appropriately represent the area in which I thought price would probably knee-jerk reaction from. It was actually nothing to do with a 1 hour time frame. Is that the question, or? I had mine, but it was a bit thinner as I had the daily zone incorporating it. Ooh. You had the daily zone incorporating it all. What you mean? You don't mean your daily zone was like that, do you? Or do you? I mean, to be honest, it could have been, couldn't it? Yeah, it could be. I mean, that could be a daily zone, but not in the context. We're looking for trading margins, right? We're looking for margin of availability. The 1 hour time frame. This goes back to the 1 hour time frame. The 1 hour time frame shows that there is a lot of commercial interest all building in the market, at the highs and at the lows. Now, I know you know this, but for the sake of others who watch this back in time as well, when we see kind of this price equilibrium, it means there's a shed load of market inflow coming in. Millions and millions of dollars filling into the market, eventually waiting for that mega breakout. But of course, if we're looking at the daily and the daily only, we're incorporating all of that. We're going to reduce those margins to trade. So we want to be looking at sort of joining the commercial interest and trading the range with them. Now, of course, I'm not looking at intraday trade these today. I'm looking for 1 minute breakouts. But the chances of a 1 minute knee-jerk reaction away from this point of liquidity are high. And yes, I do know that is the high, not the high. But that's basically my train of thought there. To the 15 smaller, yeah. Okay, yeah, fair enough. Alright, well, if that's it, I will wrap things up there then, team. I hope you all have a wonderful day. For those of you who managed to get this on catch up as well this afternoon, Have a good one. If I don't speak to any of you before the weekend comes, have a fantastic weekend. Look forward to catching up with you next week. And don't forget that I will be back in touch this afternoon, absolutely, with the US indice breakdown session. So I'll catch you then. So take care, guys. Have a good one, and I'll see you later. Bye-bye.